You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means we're back once again. Yep, it's time for the option block, everyone's favorite bi-weekly source for all things options related, hot off the heels of TWIFO, new to its new Thursday time at 1:30 p.m. Central. We're talking about maybe moving the option block as well. You guys, let us know if you prefer where it is now, 3 o'clock, so right as the markets are closing, or if you like it more midday, because given our other broadcast schedule, probably would have to move to sometime maybe around noon on Mondays and Thursdays. You know, might be interesting. Maybe mix things up a little bit. It's always fun. Been doing it this time forever though, so if you guys are used to that, let us know what you think. If you prefer this time, or if maybe during when the markets are open, you guys prefer. We're kind of open. We're playing around with some fun stuff here on the old network. You guys, that means, of course, at least for the time being, you guys can still join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixler. Of course, you can always get the podcast there on theoptionsinsider.com or via your favorite device of choice. Of course, if we move the show earlier, there's a chance maybe you'll get that podcast turned around for you same day, which would be kind of interesting. Maybe so if you get podcast listeners, I know that's most of you, maybe you can get it, later that same day on Thursday, which would be cool, or Monday, rather than waiting till the next morning. So interesting stuff. Perhaps let us know your thoughts there as we keep on rolling. Of course, speaking of thoughts, hit us up, questions, comments, insights, pearls of wisdom. We do, yes, indeed, we do like to hear from you guys. And joining me on the program today, let's spin the wheel. I think we go all the way out to Grand Haven, Michigan, then back to somewhere in Chicago or the nearby environs, where we are joined. All that dripping means we are joined by the greasiest of meatballs. Yes, it's grease time. Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. He of the VXX puts fame / infamy. Mr. Meatball, welcome back to the show, sir.
Hey, how are ya? It's good to be back. Good to be here. The world is awesome, and let's give it a cheer.
The world is awesome. Let's give it a cheer. By the way, we've gotten more comments and questions and follow-ups on those freaking VXX puts than like anything else.
On those penny puts.
You haven't been on Volviews in a while. It's been the nonstop talk of everybody who's writing into the show.
I can't wait.
I buy them. I'm buying more of them. I'm buying them like you guys. I'm selling them. Why would people buy these? You name it. Just. My favorite, one guy, what did he say? One guy said, he went on an Imelda Marcos shoes style buying spree of those puts.
1,300 of them traded today.
Maybe that was him. I don't know. But
there are a lot of interesting trades in VXX today. I'll tell you about what I was doing. Or should we save it for Vol Views?
We can touch on it a little bit here today, and then we'll do some more tomorrow. We always mixing it up, a lot of fun stuff. Speaking of mixing it up, we're not mixing it up. We're keeping it the same with our next cohort here, Mr. Uncle Mike Tosaw of I almost said RCM, but he still works at RCM, but he's really the man about town over there at St. Charles Wealth Management. Uncle Mike, welcome to the show, sir.
Always happy to be here on a lovely August day where it's not 1,000,000 degrees out.
Glad you're here. Let's give it a cheer for St. Charles.
All right, and listeners, if you're listening to the podcast, it's too late. But you guys should know by now, you should be trained as well, just to know anyway, around this time on Thursdays. Pay attention to our Twitter feed at Options, because we just tweeted out, we're about to tweet out anyway, Uncle Mike's selections for today's strategy block. So choose You guys get to control your own destiny, your own fate. It's like a choose your own adventure, this show. You get to choose which of those 4 strategies we're going to have on the show today. First, his 4 choices he's putting out there. Why marijuana investing won't work long term. Interesting. Number 2, can Apple hit $2 trillion? Interesting as well. 3, what will happen if we get a couple more rate hikes? And number 4, I think I know which one Sebastian's voting for. WWF champions, 1984 to 1988. I might go vote myself. As our team is condensing those into Twitter size as we speak, so they should hopefully be live at Options over there. So if you're listening live, you can go over there and make your votes, make your voices heard. Really. Meanwhile, though, we're going to keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the block of trading, aka the trading block, and another day, another earnings announcement, set of earnings announcements, really, and just a whole bunch of craziness going on out here on the street today. You know, the narrative coming into Monday show and into like the Tuesday announcement of Apple, of course, was can Apple save big tech? Can Apple really turn this earnings season around? Obviously, it was kind of getting pretty dire there, one after another, of firms kind of disappointing and missing their numbers and kind of just setting the world on fire to the downside. Facebook, the most infamous, Twitter didn't help either, and a bunch of others really coming in on the heels of that and just taking a beating out there in big tech. So Apple's earnings this time, you could argue, were some of the more important ones. Everyone was really focused on that. Would they really be the worm that turned the market? And yeah, spoiler alert, yes. In a nutshell, yes. They continue to sell, I think the technical term is a bajillion iPhones and everything else out there. They were up across the board. You know, watches and MISC stuff was strong compared to year over year ago. Everything they pretty much do was up, with the exception of what used to be their core business, the Macs. That's kind of the only sign of weakness in their lineup. Everything else was kind of just ridiculously strong. So proving once again that Apple can do that old 1-2 punch of earnings, that earnings dance, better than anybody. Oh, we're terrible, we suck, we can't sell. Oh, wait, surprise, we sold everything. They do it every quarter, and the analysts continue to fall for it, which always cracks me up. Speaking of analysis, we did a lot of it here on the show, talking about what they were pricing in and what was actually delivered. If you go over to the website right now, theoptioninsider.com, Matt and his team from ORATS have put together the post-earnings move results report as well. So they're breaking down what was priced in and what actually got delivered here. If you look at Apple, they were closing right around 190 going into their report. At the time the report went out, stock was about 200. As of right now, they are at, where did Apple? 207.63. Spoiler alert, of course, they're also the world's first $1 trillion company. I'm not sure if you heard that. Kind of big news. I think everyone's heard that by now, but just a crazy town out there. Let's see what else in the earnings result. The actual earnings move was $10.12. They had priced in $6.70 on that straddle, so dramatically outperforming they were expecting, of course, coming in, expecting the vol about 25%. The actual post vol was about 19.1%. So that's interesting to know as well, kind of how much the vol comes in post these kinds of events. Uncle Mike, we got to start with you, I guess, then, because you're the Apple. Well, you're what's left of the Apple junkies here on the old squad. Used to be hardcore, used to be really mainlining it hard into the veins. These days, not so much. Maybe recreationally on the weekends. That's kind of about it. But what's your take on the crazy madness of Apple hitting $1 trillion and everything else going on in today's market, sir?
Well, I wish I could go back in time to all those days where you and Mark belittled me, made fun of me, just said mean things about me for having such a big position in Apple, and kind of like the milk commercial back in the 80s when they make fun of the kids and they say, but I've been drinking milk and then I'm going to be bigger than you someday. So that's kind of how I kind of feel in some ways today. But the reality of it is it's not as big of a position in the portfolio as it once was. So I can't take too much credit for it. But for many years,
Mike, I'm just saying, the blind squirrel finds a nut every now and again. You know,
but I've been drinking milk.
You have been drinking milk, thankfully.
But with that being said,
is the bully Cisco in this case, or is it a different stock? Or is it in March?
Bringing up old wounds. I love it. Touche. I deserved that for bringing everything up. But anyway, with all that being said, this is a big day today. Apple does hit the $1 trillion mark. First stock in history to do it, arguably, because it's the biggest stock ever in United States history. Then you could say it's the best stock ever in terms of size.
I agree.
So this is a very big day. I think that with through the years with Apple, a lot of the talk that you see in the financial media today was that they're not changing the world. Where they made their money the first time around, or when back in the Tosaw days of Apple, was just inventing new products and changing the world. And that they invented the iPhone, they invented the iPod. For those of you that can even remember that far back, they invented the iPad, and all the things that they did that changed the world. But now it's kind of taken a different evolution to the company in that they're not changing the world anymore. They're profiting from the changes with which they were the first to make. They're no longer just selling the iPhones for a few $100. They're selling them for $1,000, and people are paying for them, quite honestly. They're not only making a few bucks here and there from iTunes, they're making quite a bit of money from it. So a lot of the money that they make now, yes, it does still come from the iPhone, but what it also comes from is a lot of the just general revenue that they're getting from subscriptions to all the things with which they have. So I still don't see them necessarily being the world changer that they once were, but with that being said, they are quite the profit machine, at least as of the last earnings report, to say the least.
Yeah, they've done a lot of really good things. I like that. You know what's been interesting? I was talking to on a show about this. If you look at who's having a great quarter and who's not, is people that actually make things are doing great, and people where kind of the product is you. The product is data. So your Amazons, your Facebooks, they're not doing well. And you know. So it's just kind of, I was unsurprised that Apple did so well this quarter, and I think it's going to keep going. I think as important as it is that it's $1 trillion, which is really, it's news. I care more about how quickly are they going to make their next $100 billion. I think that's what people need to think about and analyze as they hold it in their portfolio. Is where does it go next? And I'm kind of interested in your thoughts, Mike, and in your thoughts, Mark.
I think right.
Go ahead.
I think
Mike.
right now with where they're going to go, I don't see. The other thing you can say with Apple, I think they're going to continue to try and build out a lot of their revenue sources in terms of the subscriptions and things like that. But the one thing that Apple really has not pushed a lot, and although I'm still not convinced it's going to be the greatest thing, but one thing that they have not pushed is wearables. And the other thing is that they invest billions. I think I'd read somewhere $14 billion per year, billion with a B, into research and development. And at some point, if they can come up with a product that just kind of changes the world, then I think the stock could really go up a lot further. I don't know if they're going to. I don't see them continuing to get this pace that they've had over the last year or so in terms of for growth without another big product. But what do I know? I've been saying that ever since I got out of the stock.
You're right. It is something to watch. I was speaking of the wearables. I was kind of surprised that they kind of lump it in like a MISC category. They don't really break out the wearables as a separate item. But if you do the math, you see that the wearables actually are up pretty strong. Their total wearable sales and of course their services, things like music and things like that, are really starting to generate meaningful billions with a B to the bottom line, as to before when they used to call them experiments. Now these things are actually real. Fledgling, not even fledgling. These make more money. The wearables division probably generates more, and doesn't make more revenue, but they probably keep more money from the wearables division than Netflix does in all of their revenue. So it's interesting to see kind of what's been going on with these things as these things continue. I know they've dialed back. Everyone was waiting for the Apple Car, and they kind of think they've dialed back that little experiment. So maybe not going to see the next earth-shaking item there from Apple as we keep on looking. Speaking of cars, another name popping off this week. You guys may have heard of, may be familiar with. Begins with a T, ends with an A, and in the middle it has just a freaking huge move. It's Tesla. They're closing today, right? Almost 350, 349.5. They got as high as, they didn't break 350. The 349.99 was the high. Coming in hot off of their earnings on Wednesday yesterday. They were pricing in, they were pricing in about 18 and a quarter. So spoiler alert, they outperformed that by about 30 handles. They moved 48 handles today. And they're historically, they projected about 15 and 15.30. They've actually moved about 13 average in past quarters. So blowing the doors off it in any way, shape, or form. If you've been watching Tesla, the kind of the death march, the death watch really is on. People are waiting. We talk about these crazy puts. We'll get to them in a little bit again, how much of those are trading these days. And yet all of that just going up in smoke today. Article Market Watch talking about the billions that short sellers out there. There are many, including the big short guy who's now famously short Tesla, all taking a thrashing in today's market. Mr. Meatball, any of your crazies in the pitch chat slinging a lot of Apple or Tesla?
We're definitely slinging Apple today. I've been trading Apple to go higher for several days now. But outside of that, it's been not a lot of Tesla talk. Generally speaking, I don't trade Tesla because I have a bias against the company. I agree with our long-term put buyer. However, I would kind of point out that this thing looks like it's starting to get today looks more like a short squeeze than an actual deserves to be up $48. I'm looking at the September conversion, and it's not cheap to borrow stock on Tesla. I think looks like the borrowing cost is somewhere near $1. So I don't know about you, but I'm not much. That to me typically makes me think that there's some people being forced to cover, and that could be as much of what drove the stock higher today as anything. I may be playing around. I may be joining our 100 by 50 1x2 put trader, because I think that guy's onto something.
There definitely are some of those piling in later. Those straight up puts are trading a ton as well. Again, we'll get to all that stuff. You mentioned at the top of the show. We'll obviously do a deep dive into it tomorrow on vol views. But today, another day where the vol shorts got a little bit of a smile on their face. Most of the indices up, except for the Dow. The Dow's feeling like it's just feeling. It wants to be the spoil sport of the party. Everybody else up. S&P up at 0.5%. Q's up almost 1.5%. That means VIX taking a little bit of a break off, nearly at full handle. How low did we go intraday? 12.17 was the low, closing right around 12.22. So closing right near the lows. Our old friend VXX taking a little bit of an exhale today as well, getting as low as about 36. He actually had nearly a two-handle range, got as high as 32.5, showing kind of what topsy-turvy vol markets were in these days. Closing today right around 30.80 or so. Mr. Meatball, aside from gobbling up all those juicy puts, what else were you up to in VXX today, sir?
I had there was a trade that went up this morning on the open. Customer bought the August 31, September 7, 27 put spread. And he did 2,000. So then I looked
31.7?
The August 31, September 7, 27 put spread.
Oh,
so,
I see what you're saying. I thought you said, I thought the strikes were 31 and 7. I was like, that's an interesting
No. It was the August 31st, September 7th, 27 put spread. Guy paid 15 cents. I like that order. I piggybacked him and did a few myself at a slightly worse price, but I'm still pretty happy with the level I did it. Pretty smart trade. Produces a theta, produces a bearish delta, gets along a little vega. You do that delta neutral. You've got a trade that's going to be pretty nice. And full disclosure, I did it pretty close to delta neutral.
Interesting. I'll have to dig into.
It's an interesting one, Mark.
Yeah.
If you get a big pop in VXX, you do great. And if you get the slow death, which is more what I'm expecting, you also do great. You only lose if if VXX can manage to stay in one place for an entire month, which is pretty difficult.
Yeah, I was thinking about that because kind of the slow death I think is kind of what a lot of people are kind of leaning towards, and how that shapes up in that scenario is kind of interesting. I like that. We'll have to again we'll table further discussion on that until tomorrow's Vol Views show, where we get into a lot of all things short volatility, but still a lot of interesting stuff popping off over there. There's some other names I should mention popping off after the bell today. We've got some names coming out after, including Activision. I don't have their straddle at hand here to see what they're pricing in, but they closed today at 74 even, selling off in the after hours now, off about 230 or about 3.25%, hovering right around 71.5 or so level out there in the after hours. So I guess not a lot of love for Activision Blizzard. The other name, by the way, we have at least one of these in our poll this week. GoPro, closing today $5.99, so a little bit shy of the 6 handle. And in the after hours, they're up 23 cents, or nearly 4%. They were rallying a little bit higher, coming off that a little bit as well. I don't have either of those straddles on hand, but we'll keep an eye on those as we keep on rolling. And by the way, listeners, get your votes in right now. Choose long-term marijuana investing. Can Apple hit $2 trillion? Should there be more rate hikes or WWF champions 94 and 98? These are good. We got to teach Uncle Mike the brevity of Twitter, though, so we could squeeze more of that goodness in. Meanwhile, we got to keep on rolling. Squeeze more goodness in. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, we got breaking stuff coming here to the Odd Block. Mr. Meatball, keen eye there, pointing out Take Two. And also another publisher out there. They closed today up $1, 113.25. They're halted right now. So something is afoot. They're pricing
more. It's up 6. Nice pop.
And they're pricing at about $8. Looks like.
Yep. Wow. It's trading 119 now 120. So my guess is they did well. I must be. What games does Take Two make?
I believe they're. I think they do Rockstar, Grand Theft Auto, all that Rockstar stuff is them. Yeah.
Yeah. So that's why they probably announced, something awesome.
They're probably looking ahead to the big. What's the cowboy game that everyone's excited about? I forgot. Oh, Red Dead Redemption's going to be coming out. I think later this year. That'll be a huge one, I think, for them. So they're probably looking. Probably issued some good guidance for that. Of course, that should be baked into the stock. That's not a surprise. That's coming out.
I mean, let's be clear though. The what was it? The Grand Theft Auto Vice City might have been the all-time greatest commercial for a video game in history.
You just like the neon 80s.
With the flock of seagulls running and them all shooting each other.
You love neon 80s.
That was an amazing commercial.
I think maybe they're also popping on the fact that stupid, whatever it was, Grand Theft Auto 5 came out how many years ago? It's sold 95 million copies. The thing continues to sell many years later. They can't stop selling that game. So maybe just the volume of sales they have there alone could also be part of the reason why the stock is just on fire. Maybe they're stealing a little bit of the thunder from the old Activision Blizzard folks who all of a sudden they can't find any love anymore. But you know who did find the love? Talked about him earlier. Our old friends also in the T department, Tesla. Like I mentioned, just rally ho mode today. Let's go out to our friends. Let's see if a big upside day has any impact on these crazy far out of the money puts here, the Jan 2019 50 puts. And spoiler alert, yes, they traded hot and heavy again today. They're 64 cents at 70 right now. So getting back close to where they were when we first spotted them well over a year ago when they were first started trading size. I think they were in that 35 to 50 odd cent range. So we're getting back down there after hitting a peak of around $3 not too long ago. These things, again, if you want to see just Vega Just pure Vega at work. Forget Delta, everything. Just pure Vega. That's all these things. That's all these puts got. They got no Delta, and that's just the scope of the movement we've seen in these things. It's pretty impressive. From 30 odd cents to close to $3 to back down to 64 cents. Today hitting up 2,619 of these bad boys. OI hovering at 62, almost 63,000. Also worth noting the pars, the Jan 2019 par puts, 2,000 of those going up. So maybe Mr. Meatball, some of your theory about put spread starting to leg in there, starting to come on. I know initially it was all the 50 puts, but now the pars seem like they're getting some attention. In fact, it was a whole put strip, almost 600 of the 20 puts going up today, almost 600 of the 25 puts, maybe another vertical there, almost 200 of the 10 puts. Are those as exciting for you as the VXX Jan 10 puts, the Tesla Jan 10 puts, sir?
The Teslas are less exciting to me than those VXX ones, but I continue to think that all that put buying is just bondholders hedging themselves. You're going to start seeing, I would say, similar paper in Tesla in the 20s. Probably pretty. I mean, there's already 20,000 of the Jan 2020 par puts and 50 puts in Tesla right now. That is an open interest that is growing quickly, and I'm almost certain that's the bondholders, and probably some people playing for when they eventually have to go get cash. I love the fact that guy is allowed to go on and basically almost lie. I'm not going to say he's lying, but almost lie. I'm going to say set lofty, unrealistic goals, and it's got such a cult following that people just kind of buy the stock. It's pretty impressive.
Kind of the CEO job, right? Set lofty, unrealistic goals. As long as you can sell the analysts on the street on it, I guess you're doing your job, right?
Well, I don't know. We'll see.
The deeply cynical person in me. That's the view. That's the modern CEO role. Yeah, just win over the analysts in the street, and everything else apparently is moot. All the Tesla lovers and haters, I'm sure, will be chiming in on that one. Also worth noting, longer term puts. By the way, you mentioned the debt holders. There is something to that as well. We've talked a lot about the CDS sellers hedging out there. Someone wrote in recently that he was at a conference or saw a conference somewhere where a hedge fund was talking up how they own a lot of Tesla bonds, and they were hedging with these puts themselves. I'll have to go dig up and see exactly which fund it is, but they specifically mentioned they were trading these 50 puts. So apparently a lot of players in line for far out of the money puts in Tesla, including in Jan 2020, 1,628 of the Jan 2020 par puts going up today on open interest of 20,500, almost 700 of the 50 puts on open interest of 22,000, 500 and change of the 20 puts on open interest of 12, almost 13,000, even 75 of the 10 puts in 2020 lighting it up today. So yeah, long-term puts continue to be where the action is in Tesla land, listeners. So if you're not paying attention to this story, I don't know what to tell you at this point. Let's move on instead while our votes are still coming in here for the Uncle Mike Palooza. Interesting. What's winning so far is not what I expected. So get out there, listeners, and change that up unless you want to really talk about rate hikes, in which case I guess apparently you do so far. We got time yet. We got another, 10 minutes, so make your voices heard. As we get on into Williams and Company's ticker symbol, WMB, closing today $31, up about 91 cents, or about 3%. These are a energy infrastructure company, I should say, out here, and they do about 6,900 contracts a day. Today, doing about 32,000 6-to-1 calls over puts, including what looks like bit of a perhaps maybe call overwriting palooza out here in September. In particular, what do we got here? The SEP 32s lighting it up over 10,000 times, including a block of 10,000 hitting the tape for 50 cents. It's like a penny off of the bid, 10,000 times, total about 10,300 going up. Looks like no OI to speak of. So clearly all opening paper. This is again about a handle north of where we are right now. So maybe perhaps an overrider taking advantage of today's pop to get a little bit extra juice and get himself a nice 50 cents through September expiration. Let's take a look at the chart here and see what the heck's been up in WMB over the past year. A year ago, it was not that far from where it is now, right around 31.5, so about 50 cents north of where it is right now. got as high as 33.5, almost 34 back in Jan, and then it kind of sold off pretty aggressively down to about 24 back in April. So not too long ago. It's had quite the range. So it's been all over the place. Now back after earnings is kind of back on the middle to upper band of that range, right around 31. Mr. Meatball, what do you think? I think this has the feel of a stockholder maybe looking for an exit at 32 cents or looking to maybe more likely pocket a nice juicy 50 cents here, sir?
I'm thinking it's the latter, trying to pocket that juicy, delicious, sopping wet 50 cents.
That's some good juice, sir. Compared to some other things we've seen of late.
I like the juice.
The
juice is good.
Compared to some other trades we've seen for yield of late. 50 cents, you can't really sneeze at it for a month. Too bad our old buddy Mr. Grigas isn't on the show today, because this name I know was his favorite. He was the biggest Groupon bull / defender we had on the show. He might have liked this one. Of course, talking Groupon, this is our resident cheapie of the day, $4.74. So if Tesla at $3.50, a little bit too rich for your blood, don't worry, we got you covered to the tune of $4.74 here with Groupon, up about 13 cents or about almost 3%. These guys have earnings tomorrow before the open. And what we saw out here today looks like an interesting bit of a ratio, bit of a 1-by-2 going up here in good old Groupon. Looks like perhaps the 5.5 ratio, 1-by-2 paper selling. Well, the ratio's changed towards the end of the day. It went up earlier today at least. 1-by-2, 8,000 of the AUG 5 calls expiring on the 3rd. So these are 1 day to go. So this is a very earnings-focused trade, listeners. Selling looks like about selling 8,000 of the AUG 5 calls expiring tomorrow for 27 cents, right on the bid, and then turns around and trades the 5 halves 16,000 times, so 2x, for 11 cents, which was actually like 3 cents below the bid, which is kind of weird. But I think the bid kind of tightened up when the spread came in, because they were much wider. I think before this they were like 4 at 25. So I'm going to lean towards selling 1, buying 2 here of these 5 half call spread expiring tomorrow. Worth noting, no real OI to speak of on either of these strikes, at least nowhere to the size we're looking at. As the day finished, actually 10,000 of the 5s traded and 17,000 of the 5 halves. So interesting stuff if that is indeed as the paper plays out here. Interesting stuff, a 1-by-2, selling 1, buying 2. So, of course, listeners, you need this thing to get a little bit of a move on by tomorrow. Let's see here at the chart, looking back a year. A year ago, Groupon was trading $3.65, so about $1 and change south of where it is today. Got as high as almost $6 back in December. Then it kind of has been vacillating all over the place. Down to $4.25 again back in just this month, or last month of July. So it's been kind of all over the place, kind of at the middle to upper band of that range right now. Mr. Meatball, this is kind of a funky one. Selling 1, buying 2. So selling 1, 25 cent out of the money calls. Buying perhaps 2, 75 cent out of the money calls in calls that expire tomorrow, sir, the day of earnings. What say you, sir?
They're looking for a move. They're looking for quite the move. Or it could be kind of a some sort of close and roll, but my guess is they're looking for a move.
The amount of OI, this is definitely opening. So it looks like someone's got the moving pants on for Groupon.
Yeah.
I think it sounds like Grigas. I'll have to call him up and see if this was him.
It could be. It's a very Grigian type move. I miss that guy. How's he doing? I
haven't talked to him in a while, but I hear he's doing pretty well. He's been promoted up the ranks over there in Schwabland. So
love him. I ran into him on the train one time, and we enjoyed a train beer together.
He didn't run away screaming to the other car. That's a good sign, I guess.
No. It was nice. He's a good dude.
Must have been unusual for you, because I know usually when you get into the train car, that's kind of what happens, right? But it's good. You have the train car to yourself.
What episode is this, Mark?
What number? Oh, I'll have to go look.
Yeah.
I'll have to go look. I have to check in with my crack team here to see if they could tell me while I keep on rolling.
I'm interested. You know where I might go? I might go to Option Insider.
I'm going. That's what I'm doing as well. I'm going to my website right now, and I'm going to see if I can. We are on. This is episode 735.
All right. Well, we got to do something for 750, don't we?
Sure. Let's do it. What do you got in mind?
I don't know. What does the audience think we should do for show 750?
We're already blowing their minds with time changes and everything else. But if you want something fun for episode 750, listeners, maybe we'll bring back Regas because I don't think he's allowed to talk anymore. So
no, he's not.
So
maybe we'll bring back everybody who's
back
been kicked off the. Let's get everybody that's ever been on and then kicked off the show.
There we go. We'll dig them all up.
Tim the Bobby.
That's a long list. Bob, Rob Kurzakowski over there. I did see the Viceroy not too long ago. He's doing well over there in the family office land. He might be interested in coming back on, talking all things. He'll be psyched to talk macro with you, Uncle Mike. So there we go. Speaking of talking things.
All right, so there you have it, audience. If you want us to do something special for show 750, tweet at Mark, which is at the Options Insider, at Options. Tweet at Options, and tell us what you think we should do for show 750.
Yeah, get at us. Hit us up. Meanwhile, we have to tally your votes, listeners. It's time for Uncle Mike to hold court. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
Well, these are interesting results here for our voting. We had to truncate Uncle Mike's longer thoughts a little bit. So it went out as more rate hikes, ? And apparently people want to talk about that because 40% of you guys voted for that. Only 30% coming in for the WWF champs, 1984 to 1988. 20% for Apple. No Apple love today. That's surprising. 20% saying can Apple hit $2 trillion, and only 10% saying marijuana investing won't work. So, Uncle Mike, I guess you have your topic for the day, which I think, as you put it, was what will happen if we get a couple more rate hikes? There you go, sir. Have at it.
Gotta say, I was surprised. I wouldn't have guessed that would have been the winner.
I would not have guessed that in a million years, but our audience is sometimes surprising and or just silly.
For sure. But we got a close second with the WWF, so we're getting closer. One of these weeks we'll get to do the WWF history in the 80s. We'll get there.
That's the best. Why wouldn't people want that? I want to hear all about Hacksaw Jim Duggan and Hillbilly Jim and Bob Backlund and Hulk
You have
Hogan.
No idea of the history of the historical knowledge I have of 80s professional wrestling. It's
Tito Santana. Who else we got? We got
Jake the Snake, Hulk Hogan, Andre,
Ravishing Rick Rude,
Mr. Perfect. I can go on. There's so many.
Mr. Perfect.
The Hitman, the Hart Foundation.
I mean, you think about the Royal Rumble you could have with just the dead wrestlers alone.
That would be the best,
Macho Man.
the best Royal Rumble of all time, definitely.
It would be the best Royal Rumble of all time.
God's having quite the show up there in heaven.
I know.
All these
right
pro
now,
wrestlers.
I think there's a Macho Man versus Ultimate Warrior match going on as we speak.
That's my guess.
I can only hope. That would be too awesome.
That would be my guess, but
with Miss Elizabeth in Randy's corner.
Of course. But anyhow, let's talk about something not quite as exciting, but still pretty darn exciting, I think, and that is interest rates. We're not quite at a stage to where we were a few years back in terms of the interest rates moving the markets like they did. We had, in fact, on Monday's show for Around the Block, no one even mentioned the interest rate announcements that took place yesterday as in something for Around the Block. It's like we don't even care anymore. But it is something with which that we need to think about because from what it sounds like, the main scuttlebutt of what's going on these days is that a lot of people are expecting 2 more rate hikes this year and possibly 2 rate hikes next year. And from there, it sounds like at least what a lot of the general consensus is that the Fed's going to then pause for a while and consider interest rates, and I'm doing air quotes right now. You can't see it, but I'm doing it normal. And then we'll be where we want to be in terms of our economy. So how does this affect us and what's going to happen to the market, or what are some potential implications of it? Where do we go from here? So first off, let's say that I think that it's very likely that we're going to have a few more rate hikes. Whether it's going to be 2, 3, or 4 in the next year, I don't know. But I would say with very strong conviction. I believe we're going to have at least 2, and I really don't think we're going to have any more than 4. But when we have that, what are going to be some of the economic implications of it? Well, from the bad standpoint of higher interest rates, and let's just kind of go to elementary interest rates 101 here. If interest rates are higher, then companies do not have as much borrowing power because of the fact that they're going to have to pay a higher interest rate to borrow money. And because of that, the argument is that we won't have as much economic growth. Now, on the other side of it, though, here's the benefit of it, is that let's say we have higher interest rates. Well, if that's the case, then banks can typically make more money on higher spreads because they're charging higher interest rates. And just investors in general can make more money off of fixed income investments such as CDs, bonds, whatever the case may be. And then the argument may be that people that are in that class who typically have a lot more money may put more money into the economy because they're spending more money because they're getting more money on grandpa's CDs are paying a little bit more this month. So he's going to take the kids out to McDonald's one more time. So that's kind of the argument for and against higher interest rates. I'm of the school of thought over the course of the next couple of years with the potential of the interest rate hikes. I don't think it's going to have a major effect on markets in general. Reason number one, most people are expecting it. It's not going to be a very big surprise. The only real surprise, I think, is more short-term related on when they're going to do it. Are they going to do it at the next meeting? Are they going to wait a few more months? I think that's where the only major debate is happening right now in terms of interest rates is not necessarily will they, won't they, but when will they actually do it. So with that being said, I think it's going to happen. So I think things are factored in. Now, here's the other side of the coin. I've talked about this on the show. I haven't in a while, but financials make up a big part of our market. And in general, I believe that if we have higher interest rates, that it would be good for the financial institutions, such as the Chase, Goldman, the banks, the brokerages, whatever one you want to look at. And the reason for that is because, like I said earlier, the higher spreads, but also you actually are able to charge margin again in the brokerage world. Yeah, they do charge it at this point in time, but if we do have higher interest rates, and if we have higher interest rates as we're having a bull market, then there's going to be more demand for people to actually have more risk and actually use such margins. And if financials go higher, then I believe that markets can go higher. And so with that being said, I believe that it's not going to have too much of an effect, a negative effect, because number one, it's already factored in. And number two, I think it would be good for financials, which in turn would be good for the market. Now, that is my strategy block for today, August 2nd, and I look forward to next week's strategy block.
You know, it's funny. We just had the senior economist from the CME on our Trifecta show about an hour ago, and he was talking about they're actually starting to build into their models. Maybe what goes up must come down in terms of rates, and maybe next year some recessionary type events, and maybe the Fed actually taking some steps to dial that back. So hiking this year and then dialing it back next year. What do you think about that, Uncle Mike?
It's possible, but I don't see the Fed being quite that quick of a reactionary, especially when they just went through all the raises that they've had. And the reason is that would mean that they'd have to admit that they've made mistakes, or at least have to come up with some type of language saying that we've made mistakes by raising them as much as we did. So I personally don't see that happening.
Yeah, I was a little surprised that they were taking that such into consideration. That would be a remarkable and near-term about face for the Fed. They're not known for such things, but I've seen crazier things. The Fed Watch tool over there at CME Group showing some interesting stuff. Check it out as we keep on rolling. We got a little bit of time, so let's get a little bit of your questions. It's time for the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the mail block, the portion of the show where you guys ask us questions. Sometimes we turn the tables on you and ask questions. We have a good Twitter poll going on right now. Speaking of which, you guys speaking of Twitter and 80s, you guys talking 80s wrestlers before. I was looking at the results of our poll, and I see the people who run the Board of Trade building just tweeted out a photo of Optimus Prime battling Decepticons in front of the Board of Trade building in the Transformers movie they filmed here a couple of years ago. So it's a fun one. The movie terrible, but the photo was fun. So take a look at that. Listen, it's a little bit of a Chicago love there in the Transformers. Little Board of Trade there in the background. All right, this week we asked you in earnings season, still hot and heavy, which names are going to dominate your options trading this week. Gave you 4 choices. The fruit company, Apple, the car company, Tesla, the action cam company, GoPro, and the volatility company, a.k.a. CBOE. Hot and heavy voting. Let's go back to the meatball. Mr. Meatball, what do you think is winning our poll, and what is your vote, sir? I know you love slinging CBOE.
I'm sorry, what did you? I love what and what?
You love slinging yourself some CBOE options, but 4 choices. Where are people trading this week? Apple, Tesla, GoPro, or CBOE? They're
not trading CBOE. I can tell you that much. They're not trading GoPro, and they're not. So it would be Tesla or Apple, and being as how Apple is is super widely held, I'm going to say Apple, and I'm going to agree. Apple.
So Meatball votes for CBOE, and he says the audience votes for Apple. Mr. Uncle Mike, sir, what is your vote, and what is our audience voting for, more importantly?
Sticking to my Monday vote, Apple and Apple all the way.
Well, it's a hot and heavy battle, but so far coming into the final day or so here, we got Apple at 46%, Tesla hot on its heels with 42%, only 7% for poor CBOE, so no love for CBOE. They have earnings tomorrow, so I thought maybe some love for that one, and 5% for GoPro. So GoPro, oh, how the mighty have fallen. People used to love that name. They were all excited about it. These days, not so much. Let me see here. Find a good one here. This guy's writing into this show for VXX stuff. That's probably more for vol views. Let's see. Vol views. People sending stuff into the wrong show. Let's see here. Here's an interesting one. Probably also want to discuss this on our advisor show, but we'll touch it here too. People send them all kinds of stuff to this show. Andrew Lane says he tried searching for options on the major financial advisor news sources, including Pensions and Investments and Financial Advisors magazine, and he came up blank. Why do these mainstream outlets ignore this space? Where should I go to learn more about options for advisors? Well, I'm going to do a shameless plug and plug our advisors option show. It's kind of right there in the title. We do that with OCC and the folks over there at Swan and the folks over there at ORATS. So interesting show. Check that out wherever you find our stuff. It's there once a month, nice and low frequency, because advisors are busy. I don't have time to tune in much more than that. And so we cover all this good stuff. So yeah, you can go there. Also, OIC has a great resource there. You go to their optionseducation.org. Look at the right-hand side of that page. You'll see the tab for advisors. Click on that. You have to create a login, so it's a bit of a pain. But once you get past that, all sorts of great data and resources for all that kind of stuff. Mr. Uncle Mike, as the resident advisor here, sir, where should Andrew Lane learn? Where should he go to learn more about options for advisors, sir? Besides stcharleswealth.com, of course.
Of course. The OCC is a great system there. Eric Cott does a great job over there with what he's doing, and in terms of trying to spread the word amongst advisors. It's a great product for advisors, and
Option Pit
to do it. And the other one, I forget, Andrew Giovinazzi. He's this guy over at Option Pit. He's pretty good, but the other guy at Option Pit, he's a little bit suspect on it. But they do help advisors over there. And I'm going to give a shameless plug to Option Pit as well. Whenever I do run into a question with volatility or how a certain thing might be trading or need some thoughts, I do call Andrew and Mark. Mostly Andrew. No offense, Mark, but Andrew's a little easier to get a hold of. But with that, I do call those guys on a very serious note, and I manage real people's retirement money. We do real trades with real money, and I seek advice from them if it's something that it's out of my world. So I think they do a great job.
And just to return the endorsement, The part of my dollars that I don't want to have to manage and worry about, I have sitting with Mike Tosaw. He has both of my kids' college funds. So, we have a lot of clients that are actually advisors that we work with. I'll have an advisor come in for a week, and I'll actually help him build model portfolios for his clients. Obviously, he does his own tweaking. I don't have any interaction with the client themselves. But I do lots of work with advisors, helping them understand and get better with options, and the ones that understand it, helping them. We also do optimization and implementation for advisors as well. So you've got an option plan that you want to use, we'll help you optimize it, and if you don't use options and want to, we'll help you build a plan to implement an options trading program. So if you want to be like Mike, come see Mark. That's the way I would put it.
I like that. That's good. I was not expecting you guys to do as much with the RIAs and the asset management crowd. I didn't think that was a big business.
You would be surprised. Yeah, it's a larger piece. We did a look. It was a larger piece of our. We were surprised as well. It was a larger piece of our business than we realized. That's
actually anecdotally good, right? That shows the interest is growing out there.
Yes.
As the folks are starting to learn, hopefully from shows like ours and from places like OIC and everything else, getting the good word out there about, hey, maybe you could buy a put spread for your clients, or you sell a call, maybe you do both if you want to go really crazy as you're managing people's money out there. Never too late to learn a little bit about the old options. Meanwhile, let's keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we break down and then we tell you what we're keeping an eye on for the rest of this week. Into the old weekend, we mentioned a few names that were popping off after the bell here today. Listeners, let's check in on them really quickly. Activision Blizzard, they closed at $74. They're off about $1 in the after hours, right around 73. So about actually just ticked exactly 73, so off about 1.5%. Excuse me, GoPro, the name none of you clearly want to trade, is closed at $5.99. And looks like maybe you missed your chance to sell some premium out here. I'll have to look and see how rich it was. Probably not too rich. It was a $6 stock. It's off a whopping 9 cents here in the after hours. So pretty much unched. Let's just go look here really quickly at how much juice they were pricing. Closed at $6. So it was about 80 cents, 82 cents. So not bad. A little bit. If it holds here, looks like you're keeping a fair chunk of that. And of course, the big mover and shaker here in the after hours is really Take-Two. 113.25 is where they close, up $1 in the after hours, trading 122.5, up 9.25, a little over 8%. They're pricing in about $8, so outdoing that to the upside. And apparently rally ho, not so much for Blizzard, but definitely it looks like for Take-Two. Let's go back around the horn. Let's start with the Greasies and Meatballs. What are you watching for the rest of this week into the weekend, sir? At least until we talk again on volumes tomorrow.
Not non-farm payrolls, and at this point, I feel like
who watches that? Who watches such things?
Yeah, I know. And at this point, I feel like the only way we're going to move on trade stuff is in a positive direction. We saw that based on the price action today, we're just going to go straight up. If we get some sort of trade resolution. So I don't feel like any new shoes to drop on the trade side are going to be that negative for the market anymore.
Mr. Uncle Mike, are you feeling as optimistic as the Meatball, sir?
I'm always optimistic. You know that, Mark. But to add to what Mark said in terms of the non-farm payrolls, as well as the trade news, not having any more shoes to drop, we're really close to all-time highs again, and we're probably roughly 40 S&P points away approximately right now, and so we got to get through that before we have another straight-up market. But I think that's the next point of resistance for obvious reasons, and then when we get through that, I might get to say my trademark saying again. Hopefully Monday.
We shall see. Hopefully, indeed, for all the bulls out there. For the bears, they are hoping not so much. That music, listeners, means we've come to the end of another epic journey, our 735th journey through the world of options. Talked some of your favorites today, some Tesla, some Apple, some VIX, some VXX. If you like the latter, tomorrow, Bellview's noon Central, 1 p.m. Eastern, we're going to talk a lot more of that. Got some guests lined up, all sorts of fun stuff coming on for the show tomorrow, so stay tuned for that. VIX, VXX, not XIV so much anymore, but XVXY, UVXY, all that fun stuff. We'll get into all of that tomorrow. But before we go, let's go back around the horn one last time and check with everybody, see what they got cooking. That may start with you. Let's start with Uncle Mike. Sir, what's cooking? If I want to learn more about all this fun stuff you got going on and want to check out this cool box you got on your website, where should I go? What should I do?
By all means, visit my website at stcharleswealth.com. And also, if you would like an advisor who's not afraid of the words theoretical value, feel free to give me a call. I'll be happy to work with you in any way, shape, or form that works best for both of us. And we will be having a slew of educational events coming up in September here in St. Charles. So stay tuned for that.
What are your feelings, though, on extrinsic value? How do you feel about that?
That's another episode.
Okay, so I can't come to you for my help with that. Okay, shucks. I was looking forward to having a nice chat about that over some Skippy Zeros. We'll have to table that until Monday. And Mr. Meatball, sir, you mentioned all the RIAs coming to the land of the pit. If someone wants to join this flood of RIAs, or maybe retail folks, or whatever the heck they might be, maybe they're housewives in Des Moines, they just want to learn about options, where should they go? What should they do?
Go to optionpit.com. We put out a blog every day. We put out videos every day. Check out what we're up to. It's worth your time.
There you go. Option Pit, big with RIAs, and surprisingly with the housewives in Des Moines. 2 huge market segments for them. Check them out, optionpit.com, to learn more. On behalf of the Meatball and the Rock Lobster, who's out there somewhere doing whatever the heck he's doing. Hope he's having fun. And, of course, Uncle Mike and you, myself. I want to thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you do, asking so many questions, voting in our poll, listening to the live stream, all the cool stuff that you guys do. We love you. And we'll see you back here for this show on Monday. Unless you want to tune in for Vol Views tomorrow, then we'll see you back tomorrow for a little bit more volatility views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.